everyone to today's international webinar, Financial Reporting Landscape in Malaysia. I am Heskiko, and I will be your master of ceremony for today's event. Today, we are very grateful and honored to have a prominent speaker here with us, Encik Koh Kim Siang, CA Dipcom FCCA MSc, currently acting as the Deputy Dean of the Faculty of Accountancy, Finance and Business for Tunku Abdul Rahman University College. Before I move on, allow me to read some of the rules that participants are required to follow by. 1. Participants are required to fill in the attendance form provided by the committee in the chat box to confirm your attendance in today's event. 2. Participants are required to submit their summary in the evaluation form to fulfill requirements for SAT points and e-certificate. 3. Participants are required to turn off their microphones unless asked to turn them on throughout the entirety of this event. 4. Participants are required to open their cameras during the event and can ask for questions at the end of this event, particularly the Q&A session. First and foremost, I would like to invite Mr. Kevin Deniswara, SEMAK Sera Cert DA, acting as the current head of accounting program for the School of Accounting, to provide the opening remarks for today's event. Mr. Deniswara, the time is yours.
Yeah, okay, thank you, Hesky. Good morning, ladies and gentlemen. Welcome to the international webinar, Financial Reporting Landscape in Malaysia. And we are very happy with this webinar. I would like to express my deepest gratitude to all the attendees of this webinar. First of all, I would like to thank to our distinguished and honorable speakers, Mr. Koh Kim Siang, as Deputy Dean of the Faculty of Accountancy, Finance and Business, Tunku Abdul Rahman College University, and welcome to our beloved campus, Mr. Koh. Welcome to School of Accounting, Binus University. Also want to thank to our lecturers, to all participants who attend this webinar, and the last but not least, I extend my thanks to the webinar committees from School of Accounting, Binus University, especially to Mr. Bambang Leo Handoko and all accounting lab assistants that already make this webinar happen. My thanks also goes to Dr. Chin Muin from Tariusi, Ibu Arianti Puspokusumo, former head of internationalizations and partnership program. Also Ibu Dia Wihardini, Ibu Laili Alfa Citra, Ibu Debbie Sonita Lubis, and her team at Binus Global who helped us in arranging this faculty exchange. We believe this seminar will be very beneficial for all of us in increasing the insight of us and lecturers in how financial reporting landscape in Malaysia. As professionals accountant in the future, we are required to have a comprehensive and broad understanding, where we also act as specialists because in understanding financial statement, we need to know all of the necessary aspect in the form of transactions, registrations, and above all accounting standards that serve as a guide for accountants in the presentations of financial statement. Of course, the reporting technique in each countries apply different system, which I believe it will give you new insight on financial statement presentations, especially in Malaysia. So without further ado, enjoy and happy learning. Thank you very much and have a nice webinar. Stay safe, stay healthy, and get back to you, Hesky. Thank you.
Yes, thank you very much, Mr. Deniswara, for your opening remarks. Ladies and gentlemen, now proceeding to the main session. Let me introduce our moderator for today's event, Mr. Bambang Leo Handoko, SEMMMSI Cert DA, is a subject content coordinator for the topics of auditing and assurance for the School of Accounting here in Binus University. He is both an educator and practitioner in the field of auditing. Having experience as an auditor in public accounting firms, international auditor for corporations, and auditor for securing vital objects for the National Police Headquarters. Mr. Bambang is an expert in financial auditing, forensic accounting, information technology auditing, and e-business. He has had many international publications in reputable journals and proceedings with many citations and acknowledgements from international researchers. He had also won a handful of research grants from institutions and from the government. Not delaying any further, may I invite Mr. Bambang as today's moderator. Mr. Bambang, the time is yours.
All right. Thank you, Mr. Hekiko, for introducing me to the audience. All right. So I'm very grateful we can together here in this hybrid seminar with Mr. Ko Kim Siang as our speaker. So let me introduce Mr. Ko Kim Siang to you. Right. Mr. Ko Kim Siang, FCCA, MSc, Dipcom. Currently, he works as Deputy Dean, Faculty of Accountancy, Finance and Business, Tunku Abdul Rahman University College, will later called Tunku Abdul Rahman University of Management and Technology. His education is he got his Dipcom from TARUC and then Master of Science in Accounting from University of the West of England. He also has certification Fellow of Chartered Certified Accounting from ACCA. Several of his experience as a practitioner in the field of business, including as regional finance manager in E-Corp Surveillance SDN Berhad, and then vice president in Multipurpose Bank Berhad, and finance manager at Bursera Marketing SDN Berhad. So, ladies and gentlemen, and all the participants, let us welcome Mr. Ko Kim Siang. Mr. Ko, the time is yours.
Yeah. Okay, thank you, Bambang. Okay, it's an honor to be here to deliver a topic on this financial reporting landscape in Malaysia. Okay, I think for accounting students, okay, when they consider financial reporting, a lot of the accounting students themselves, they find that financial reporting is a very challenging subject. Mainly because why? There are a lot of accounting standards, reporting standards that they have to study. Because as a qualified accountant, you cannot so-called do effective financial reporting until and unless you master all the relevant financial reporting standards. Okay? So we have international financial reporting standards issued by the IASB, or we even have a financial reporting standard issued by the US Financial Accounting Standard Board, FASB, which are two basically quite different. And you also have, let's say, countries may have their own national accounting standards. But in the case of Malaysia, then the landscape is slightly different nowadays. It's easier, more so-called consistent in terms of the framework used in financial reporting. Okay, maybe for the start, you look at this financial reporting landscape. Okay, it's quite a nice scenery. Okay, so not to be worried, don't get scared off by the financial reporting when let's say for accounting student, when you do financial reporting. It's challenging, but once you master all the accounting standard, reporting standard, it's not an issue. Okay, next slide, please. Okay, when you talk about financial reporting, okay, you have to look at the types of reporting entities. Okay, in Malaysia, we have, okay, basically, I think even in every country, we will have private sector, okay, and we also have public sector. Okay, the private sector are basically run by individuals or corporations and companies who are operated for profit. They are there to generate profit, to earn profit, to create shareholders' wealth. Okay, they are not sort of controlled by the government. They are run by, let's say, either the shareholders, owners, or the board of directors. Of course, they are regulated by government regulations, Companies Act, or Securities Commission regulation, things like that. Okay. Then in the case of public sector basically will represent the government sector. Okay. These are government-controlled entities at federal, state, and local government levels. Okay. Then these so-called public sector entities, they are not there to earn profit, not there to generate profit. They are there basically to serve the public, to serve the citizen. Okay, so you see, their primary objective is different. So their reporting focus, their reporting standards cannot be the same. Okay, like next slide, please. Okay, in the case of financial reporting framework, in summary, say for the private sector, okay, private sector, you will have we call non-private entities. You go into slightly detail what do you mean by non-private entities. Okay, in the case of non-private entities, they apply the so-called Malaysian Financial Reporting Standards or the International Financial Reporting Standards framework. Because in the case of Malaysia, since 2018, we are so-called fully converged with the IFRS framework. It means from that year onwards, 1st January 2018, we are fully so-called, we fully adopt all the IFRS standards issued by the International Accounting Standards Board to be effective from that date onwards. And from that date onwards, any new standards IFRS issued by IASB will equally be applicable in Malaysia as well as in other parts of the world who adopt IFRS. Okay? But for, let's say, so-called private entities, they are so-called smaller entities. Their operations are small, on a smaller scale. They will apply the so-called Malaysia Private Entities Reporting Standard, MPERS, or it is the equivalent of the IFRS for SMEs standard. Okay, so this is on a summarized scale whereby the requirements are less stringent and make it easier for these small operations to adopt and comply with the requirements of the IFRS. Okay, next slide, please. Okay, in Malaysia, the Malaysian Accounting Standards Board, MASB, is the sole accounting standard setting authority in Malaysia. Is it previously, before we are fully converged, that means before 2018, MASB is the authority to issue new standards, and they also decide like those IASB standards when they want to adopt, when they endorse, when they need to be applied in Malaysia. Sometimes during those periods, an IASB standard can be adopted by Malaysia on a partial basis. If the accounting standard is effective, let's say 2012, it's supposed to be effective for companies in 2012. Malaysia can always adopt it to be effective in 2016, 2-3 years later. Okay, but not now. Now, let's say in 2022, if IASB were to issue a new IFRS standard, if the effective date is supposed to be 1st January 2023, it will be applicable in Malaysia 1st January 2023. It's the same time as the world all over for countries who adopt IFRS standards. Okay, so this is the sole accounting standards setting authority. The function is basically to determine and issue accounting standard, okay, used for preparing financial statements which are required to be prepared, okay, or lodged under any of the law administered by any of the 3 following authorities, which is the Securities Commission of Malaysia, the Bank Negara Malaysia, the Registrar of Companies. The Securities Commission is the one that regulates the capital market in Malaysia. The Bank Negara Malaysia is the central bank of Malaysia. The Registrar of Companies is the so-called the head of the Companies Commission of Malaysia. It means the commission that basically incorporates and regulates all business entities in Malaysia. Okay, next slide, please. And then, okay, we look at the Securities Commission of Malaysia. Okay, it is a self-funded statutory body. Okay, the responsibility is basically to regulate and develop the Malaysian capital market. Main functions: approving authority for corporate bond issue. Let's say if a company wants to issue bond to the public, okay, invite the public to invest in the bond issue, they have to apply to the Securities Commission. They will have to submit financial statement. Securities Commission will so-called evaluate their financial standing, see whether to ensure that they are sound, healthy, and let's say after they get the investment from the public, they have the capacity, they have so-called the potential to really pay back the principal sum or whatever interest payable under the bond issue. Okay. And the other function is to regulate all matters relating to the securities and futures contract, then regulate the takeover and mergers of companies, and then regulate all matters relating to unit trust schemes, supervise exchanges, means the security exchanges, clearing houses, and central depositories. Okay. And the next slide, please. Okay, as for Bank Negara, Malaysia is a central bank. It is a sole authority basically to regulate the banking industry. Okay, and this all financial institutions comes under the the control of the Bank of Malaysia. So other than, let's say, financial reporting standards, compliance by the banks, so that Bank Negara may come up with specific requirements, most likely relating to their maybe capital requirement, things like that, for banks to comply. Okay, and the next thing is to supervise the operations of financial institutions, banks, financial intermediaries, and discount houses. Okay, next slide, please. Okay, then next you have the register of companies. This is normally also referred to as the Company Commission of Malaysia, CCM, or in Malay, we call it Suruhanjaya Syarikat Malaysia, or SSM. Okay, so this authority basically regulates the corporate and business affairs of all legal business entities in Malaysia. Okay, and it serves as the agency, okay, that incorporates companies and register businesses to be licensed, to be legal so-called operators. Okay, and then it provides company and business information to public. Public can go to the company's commission, submit a form, pay a certain fee, and apply for financial information relating to certain companies. Because if you, let's say, want to deal with or invest in certain company or deal with certain companies, then you want to know their financial statement, you will go to the CCM or SSM, okay, to find out the financials of the company. Okay, and it also the CCM, the registrar also monitors and enforce activities to ensure compliance with business registration requirement and also corporate legislation. Make sure that, because all companies so-called incorporated, registered with CCM, every year they will have to file their accounts, the financial statement with the CCM. Okay, next slide, please. Okay, next private entity. What is a private entity? Okay, under MSP, a private entity is not just any private company. Okay, MSP defines private entity as a private company, okay, that is not required to prepare or lodge any financial statement under the law administered by the Securities Commission and the Bank Negara of Malaysia. Okay, and itself is also not a subsidiary or associate of another entity, which is required to prepare financial statement and lodge it with the Securities Commission and Bank Negara. So this is called a private entity. Okay, so this private entity will apply a different set of financial reporting standard. Okay, then any other entity that is not a private, that means you don't come under the definition of private entity, and you're considered a non-private entity. So if you are, next slide please. So if you are not non-private entity, then you may have to comply with the full-fledged or full suite of IFRSs or NFRSs adopted, okay, by Malaysia. Okay, you see that if you are an accounting student, you will know that now. Let's say if you are your country, I think Indonesia applies IFRSs. So you will notice that you have some IAS, International Accounting Standard, and you have some International Financial Reporting Standard, IFRSs. Okay, see both International Accounting Standard (IAS) and International Financial Reporting Standards are financial reporting standards issued by International Accounting Standards for IASB, except that IAS are issued by IASB under the old structure, whereas IFRS are accounting standards issued after under the new structure when so-called previously was International Accounting Standard Committee, okay, under which IASB is part of. In year 2000, this International Accounting Standard Committee undergoes restructuring, okay, and then it restructured into a so-called IFRS Foundation, okay. So IFRS issued by IASB under the current structure when it under the IFRS Foundation is in 2000 are called IFRS, International Financial Reporting Standard. Anything before 2000, they are referred to as International Accounting Standard IASs. Okay, next slide, please. Okay, as such, you will find that the IFRS framework that is currently in place, okay, is a combination of all IASs. Most of these have been updated. Okay, most updated under the new structure, and the new IFRS issued by IASB, they are now all referred to as IFRS. So in accounting so-called terms, every time when we refer to IFRS, we are actually referring the whole suite of IASs and IFRS. Okay, so like I mentioned just now, by being fully converged with IFRS on 1st January 2018, all existing IFRS, that means including the applicable all IASs and the IFRS issued by IASB, are fully applicable in Malaysia from that date, that means 1st January 2018 onwards, okay, without any changes. Okay, and the next thing is that before that, a new IFRS issued by IASB are applicable on the same effective date, okay, as specified in that, let's say, that IFRS, which will be adopted by the rest of the world. So it's the effective date same for all countries, Malaysia and the rest of the world, same date. There's no difference. Even if there's any transitional arrangement specified by the IFRS, it will be the same. Last time is not. Before we are fully converged, NASB can decide whether to fully adopt a standard or just adopt partially some of it. Okay, and the effective can always be 1, 2, 3 years later, or some can be so-called completely not adopted at all. Okay, next slide, please. Okay, so in Malaysia, all IASs and IFRS are known as NFRS under our Malaysian own NFRS framework. Is it? We are fully converged. That means every standard issued by IASB, okay, is basically adopted by Malaysia. Okay, so the MFRS, so-called we change it to MFRS, are exactly the same word for word as the IFRS themselves which is issued by IASB. Okay, then the titles of the MFRS are also exactly the same except the numbering. We change it a little bit, okay, for the old IASs. Okay, next slide, please. Okay, you see, the MFRS are numbered according to a certain format, okay, to differentiate between IASs and IFRS. Okay, you see, under IFRS framework, let's say you have IAS 16, property, plant, and equipment. Under our Malaysian MFRS framework, it is referred to as MFRS 116. Property, plant, and equipment. The title name, same, but the number is 116. That means it becomes a 100 series. It is 16 under IFRS, but under Malaysia, it is 116. Okay, so it basically is easy to recognize. But for the new IFRS issue, let's say the new IFRS 16 leases, under NFRS framework, it is called NFRS 16 leases. It's always single digit, double digit only. Okay, follow exactly the IFRS numbering. So you can differentiate them, let's say, easily. Let's say when you want to apply, okay, you will know that the moment you see is 300 series number, means it is an OIAS. And of course, most likely it has been revised and updated by IASB. Okay, next slide, please. Okay, as of today, okay, there are still 25 IASs that has been revised, updated, and are still applicable, okay, out of the original 41 IASs issued by IASB. The rest have been either superseded, okay, cancelled, right, or some are even replaced by new IASs. Okay, the rest have been superseded by IAS. Let's say example is IAS 17 leases. This has been superseded by the new IFRS 16 leases. Okay, so as for the IFRS, currently, if you look at the IFRS foundation, okay, there are 17 IFRS issued to date and are also currently applicable in Malaysia. Okay, right, next slide. Okay, you see, when we say Malaysia, in Malaysia financial reporting, we are fully converged with IFRS. We are not just applying, we are not just referring to the international financial reporting standard itself. There are other documents that are issued by the IASB that are still so-called, in a way, adopted by us and are in different documents, especially for practitioners, for companies, in their application of the actual IFRS. Okay, one important document is the conceptual framework for financial reporting. This is not an accounting standard, but it is a very important document. All accounting students must study this document because this document forms the basis, okay, contains the basic framework, okay, from which the IASB develop all future accounting standards. It will list out all the so-called bases, principles, okay, and methods that are adopted by IASB. Okay, and IASB will be using all these to develop future accounting standards. Okay, this conceptual framework itself, in fact, has been updated before. The original conceptual framework document is called the conceptual framework for the preparation and presentation of financial statement. It's a very old document. It was issued back in 1989. Okay, I think all of you are not born yet. Okay, and we are also referring to the IFRIC interpretation. Okay, IFRIC is basically the International Financial Reporting Interpretation Committee. This committee basically functions as a so-called the authority to interpret the financial reporting standards. Normally, when it's new, so a lot of companies maybe sometimes when they go through the standard, they do not really know what exactly, okay, is the intention or how to interpret the provisions in the accounting standard. So this authority, this department will issue interpretation for cases where the interpretation maybe is quite complicated. So different companies may look at it differently, and so as not to have to end up, different companies apply the provisions differently. So the IFRIC committee will come up with interpretation documents, and so that companies can refer to it and so-called understand the interpretation of the standard. So today, there are about 15 IFRIC interpretation in force issued by the committee. Okay, then we also look at this SSC interpretation. Okay, and 5 of them. Then we have practice statement. Practice statement so far issued by IASB is only 2. Okay, so these are all documents. This essentially is all documents issued by IASB are applicable, are adopted by us. Is must be understood and learned by accounting students. Okay, yeah, next slide, please. Okay, after looking at the IFRS and NASD, then we next look at the Companies Act. Okay, the Companies Act also determines what or how you present your financial statement. Okay, see our Companies Act before this 2016 Act, it has been the Companies Act 1965. It is almost slightly more than half a century old. Okay, 1965 is about 50 to today is about 51 years, 52 years. Okay, so in 2016, the new act comes up with the so-called no par value regime, in the sense that previously shares that can be issued at with a par value. Okay, $1, then you issue it at $2, and $1 goes to share capital, $1 goes to share premium. But from 2016 onwards, the Companies Act comes into force, all shares issued will no longer have a par value. Okay, if you issue that $1, whole $1 goes to your share capital. If the same company, same class of shares, issue another, let's say, batch of shares, let's say at $3. Again, let's say 1 million. So the whole 3 million goes straight to your share capital. You don't have to split between the share capital and the so-called share premium anymore. From now on, you don't see the share premium count in the statement of financial positions of companies anymore. Okay, by now, all of them would have already utilized their share premium. Okay. And due to this no par value regime introduced by Companies Act, so the presentation of share capital in the statement of financial position will change. Okay, let's say we have a situation, assuming 10 million $1 par value originally issued at 160 under the old Companies Act. So 10 million issued 160. So 10 million, you have 10 million in the share capital par value based on $1 par value. Then the additional 60-cent premium, okay, it goes to share premium. And the use of the share premium is basically restricted. You cannot distribute the share premium as dividend. Okay. Okay, then post Companies Act 2016. Okay, all these old shares, even if it's old, and you have to change the presentation, then you should have just put 10 million ordinary shares, amount 16 million. Okay, let's say the same company were to issue, let's say, another 5 million ordinary shares, same class, okay, at the value of let's say $2. Okay, so 5 times 2, the 10 million will go straight into add to your 16 million share capital. And the number of shares is to increase to 15 million shares. So the distribution becomes 15 million ordinary shares, 10 plus 10, 16 will altogether 26 million value. Okay, so this is how the no par value regime affects your presentation in your statement of financial position in the share capital in equity side. Okay, next slide, please. Okay, under the Companies Act, okay, you have different types of companies. Okay, a company under the Companies Act 2016, a company may be incorporated as a company limited by share. Okay, and it's limited by share, that means it is liability of the members, the shareholders. Okay, is limited to the amount of the shares that you have subscribed to. Okay, so let's say you subscribe to, let's say, 10,000 shares, $1 share, $1 each. Okay, issue at $1. So your liability is only up to the 1,000. You pay the 10,000 to the company. The company use it better efficiently or not, lose all the 10,000, and that's it. Then you just lose your investment. Okay, whoever the banker, the supplier cannot come after you if the company cannot pay them. Okay, so it's like the liability is limited. The company liability is also limited as to basically up to the share capital. Okay, then it can be sorry. It can be a company limited by guarantee. Okay, liability of the members, level in this case, is limited to the amount that the members have undertaken at the beginning, and they will contribute only in the event if the company were to be wound up. If nothing happened, can operate normally, then they don't have to come up with anything. But if any problem arises, then the company has to wound up, then the company doesn't have enough money to pay off all the commitments or liabilities, then the members will have to so-called fork out the amount that they are so-called guaranteed, they subscribe, okay, agreed to contribute. Sorry. Or it can be incorporated as an unlimited company. Unlimited, that means there is no limit on the liability of the members. If you are a member of such a company, if the company fail in its operation and owes banks and suppliers a lot of money, they can't get a payment, the repayment from the company, they can come after you for payment. Okay, right, next slide, please. Okay, then again, you have other the types of company, like what is private company? Under the company side, private company here normally it has no more than 50 shareholders. Okay, and they have a restriction on the transfer of its shares. Okay, you can maybe transfer among your existing shareholders. You cannot transfer to others. Okay, another outsiders. Okay, and you cannot offer your shares to the public. Okay, and you cannot invite public to deposit money in your company. Okay, then you have a public company. What is a public company? The act say any company which is not classified as a private company is termed as a public company. That means if you don't qualify to be a private company, then you are a public company. Okay, next slide, please. Okay, then you have private or public company. Okay, see, a company limited by shares. Limited by shares. Again, the name of the company must end with words Sendirian Berhad in full, or the abbreviation STNBHT. So this is very common. Most common form of companies you see, okay, the names always end as STNBHT. That is Sendirian Berhad. Sendirian actually has a meaning of like private. Berhad means limited. Okay. Then in the case of a public company, okay, the name will end with the word Berhad. Okay, in full or the abbreviation BHT. Berhad is limited. Okay, but in the case of like all public listed companies, they are always just Berhad. Okay, public listed companies are all Berhad. The next slide, please. Okay, then again, a company limited by guarantee, okay, must also be carry the name, the word Berhad or the abbreviation BHT. It is limited, but in this case, it's limited by guarantee. Okay, but for an unlimited company, okay, a private company, then it will be Sendirian or in full or short form STN. Likewise, public company, it is unlimited, also Sendirian or STN. Okay, there's no Berhad there. This is unlimited. But this thing is quite rare. Okay, in fact, nowadays, not many people will want to set up a company with unlimited liability. Okay, next slide, please. Okay, then the next thing that you need to look at is the difference between the public sector. Okay, public sector, let's say we look at public sector, you are looking at federal, state, local government levels, okay, or bodies or statutory bodies, then they will apply the Malaysian Public Sector Accounting Standards and the SAS framework. Okay, this framework, okay, basically will be under the so-called the jurisdiction of the Accountants General Department of Malaysia. Okay, and then of course, then if under the public sector, you have another category of so-called entities. They call it government business enterprises. These are similar to private companies. You know, they are set up, controlled by the government, but they are actually sorry. They are actually formed for the purpose of earning profits. Okay, it's like what we have here. Currently, like say, Tenaga Nasional, Telecom. These are controlled by government, but they are out there to provide some essential service to the public, but also at the same time to make profits. Okay, so this public sector government business and enterprises, they will apply the full flash of MFRS or IFRS framework, which is similar to the private sector non-private entities. Okay, next slide, please. Okay, then we look at, in the case of the Accountants General Department of Malaysia. Okay, so this department oversees and manages development, issuance, and implementation of the Malaysia public sector accounting standards. Okay, actually, all the Malaysian public sector accounting standards are developed or so-called adopted from the international public sector accounting standards issued by the body under the IFAC, the Institute of the International Federation of Accounting. Okay, MPSAS, okay, are developed primarily from the international public sector accounting standards. In the case of this public sector accounting standard, whatever the Accountant General's Department adopt for application in Malaysia may not be exactly the same as the international version. Different from the MFRS, which are word for word the same as the IFRS version. Okay, so here are some of the changes they may be changed to meet the local requirement, to reflect the uniqueness of the local operations and environment. Okay, so this is the difference. Okay, that the international public sector accounting standards are issued by this International Public Sector Accounting Standards Board, okay, which is an accounting standards setting body under IFAC. IFAC means International Federation of Accounting. Okay. Next slide, please. Okay, in the current situation, there are 37 Malaysian public sector accounting standards which have been issued by the Accountants General Department of Malaysia by the public sector. Okay, in fact, many of the public sector accounting standards actually are quite similar to the IFRS. Okay, but some are very public sector specific. That means they are unique, okay, to the public sector entities only. But majority of them, most of them, they are more or less very close, okay, to the IFRS so-called provisions. Okay, and the Malaysian public sector accounting standards, okay, issued may not word for word, okay, but are similar most of them are similar in a material way, okay, compared to the international version. And even the international version of the public sector accounting standards, okay, a lot of them also contain the similar provisions as the IFRS as well. The next slide, please. Okay, the financial reporting, okay, will not be complete without any mention on this Islamic financial institutions standards. Okay, this accounting and auditing organization for Islamic financial institution, AAOIFI, very long name, standards. Okay, this body, they issue standards for adoption by the Islamic financial industry. Okay, the objective, you see, the objective of the standard issue here is not to report the economic substance of the transactions that have been undertaken. They are not focused on reporting the true economic value of an asset, but rather more to depict, okay, to make sure that the financial report standards, the information comply with the Sharia rule. Okay, so you see, because of this, the MASP considers that their objective, IFRS, the objective is what? IFRS, the objective is, let's say they want convergence worldwide, so that all financial statements are compatible. Okay, and it's always the case whereby IFRS standards, the primary concern is that why they give guidance, how they recommend accounting treatment on certain accounting transactions, accounting event, is basically IFRS go for the objective is to ensure fair reporting. That means if you comply with IFRS, okay, the effect is such that your financial statement, okay, if you have complied with all the relevant IFRS, your financial statement is going to be considered to be true and fair. Okay, like even in the case of company law, the Companies Act. Companies Act refers to accounting standard to refer to the IFRS. So by law, let's say in Malaysia, by law, you are required to make sure that you comply with all relevant IFRS. Okay, because the provisions in the Companies Act is actually quite limited as far as reporting is concerned. Okay, so whereas in the case of IFRS, sometimes over a period of 2 years, you can issue a few new accounting standards, okay, to prescribe new accounting treatment, new principles to be adopted by the companies. Okay, so you see, because of this, you see the MASP, when this new Islamic financial institution standard came out, they look at it because they find that at the end of the day, quite a number of these provisions, the requirements are not compatible with IFRS. So they cannot adopt it. Okay? So that's why in this case, Malaysia does not adopt the AAO IFRS standards. Even though, let's say, we have quite a so-called significant Islamic financial industry in Malaysia. Okay, but the MASP has decided that they will still continue to use IFRS in their financial reporting. Okay, if for accounting student, if you look at IFRS, you may think that it is very complicated, very scary. Okay, like say the number of standards IAS, I think this one is about 25, is it? Okay, and then the IFRS is about 17. So total is about 40 over accounting standards. Okay, but the good thing is that IFRS framework, their accounting standards are what we call principles based, because they just set the accounting standard will just set the principles applicable, and then very often the prescribed accounting treatment they go on a certain principle. So long as you apply a prescription and you achieve the so-called, or you comply with the principle, okay, then you are okay. You see, compare this with the US version. The US accounting standards compared to IFRS, we call it, they are very rules-based. See, in US, if you want to study to become an accountant, it's going to be much, much more challenging. The accounting standard that we have is many, many more compared to the IFRS standard. See, in the case of the US, their accounting standard, we call it rules-based because, you see, IFRS may have one accounting standard, but US, for the same topic, same so-called area, the US, they have, let's say, 5 separate accounting standards. Why do they have 5? All these 5 are to be applied in different situations, very specific. But the standard will define exactly what situation you apply this. In another situation, you apply B. And yet another one, you apply C. So you have to learn all the ABCD under different so-called scenario, different cases. So it is very challenging. Okay, but it's very rigid. But US is used to so-called such rigid financial accounting standards. Why? Because they like it. Because it is not open to interpretation. involve less judgment, because in US, people there are very so-called litigious. Anything they pursue you. So they don't like to apply in accounting standards that are involve a lot of judgment. To involve judgment, they say, let's say the public say, your judgment is poor, very bad. Ended up, I incur losses, then I will sue you. So you go to court. If you cannot justify your judgment, then you have to pay compensation. So in the US, the accountants don't like this. Even though there's a joint operation between IASB and FASB, the Financial Accounting Standards Board of US, to streamline, to harmonize their accounting standards. Okay, but it's a very slow process. Okay, very slow process. Okay, but at the end of the day, I think there may be no choice, because US may have to eventually slowly converge, because US standards is only applicable mainly in US, whereas now the rest of the world, okay, the majority of the countries are already converting to IFRS. Okay, because once you have so-called harmonized accounting standards framework, okay, everywhere you go, the financial statements are prepared on the same basis, same accounting standards, then it is easier to understand. And when you make comparison, okay, it is more comparable. Okay, unless, I mean, the only thing is you may have to translate to cater for different exchange rate, things like that only. Okay, because I think also arising from some of the past financial scandal in the US, especially, I don't know whether I mean, maybe you are too young to know the Enron financial scandal. Enron financial scandal is the one that causes the demise of Arthur Andersen, one of the so-called the big four accounting firms. Okay. The Enron case is basically because of the rigid accounting standard applied by the US. And because of that, they start to look at IFRS's principles-based accounting standards. Okay. So I think for accounting students, okay, do not be so-called deterred or discouraged by the number of accounting standards you have to study. Okay. But at the end of the day, okay, next slide, please. At the end of the day, okay, you see, you look at the one of the picture, the one with the highway, with the sunset horizon. See, it can be a long and winding road, but it's on solid ground. Okay, at the end of the so-called the highway, the turning there, you will see that it's a beautiful horizon of the sunset scenery. Okay, and it's provided if you master all the relevant financial reporting standards in your financial reporting so-called function. Okay, whereas if you were to choose another one, maybe it's a shortcut. Okay, but it's not a very solid, not on solid ground. Okay, what awaits you in front is like a rough sea, okay, and roaring waves. Okay, so do not be afraid of the financial reporting standards. Okay, as a qualified accountant, that is your so-called your expertise. You must master them all and be able to apply them, okay, in a so-called relevant manner in suitable situations, okay, to achieve what financial statements are there to achieve. I mean, fair presentation of the financial information to reflect the financial performance of the company or to reflect the financial position of the company. Okay. Next slide, please. So that will be all that I have to cover. Okay. So do you have any questions, any one of you?
All right. Okay. Thank you, Mr. Ko Kim Chiang, for the material you delivered in this our morning international webinar. So now we enter to our next section, which is the question and answer. So for all the participants,
yeah, feel free to ask questions.
Yeah, you have any question, you can ask question. You can turn on the mic or just type the question on the chat box.
One line also very shy.
No, I'm sure you want to have a drink.
Yeah, okay.
Tadi chat box. Okay. Okay, on the chat box. There's one question from Saskia. Good afternoon, sir. I have a question for you about the topic of this seminar. Malaysia is going to have an election this November.
Hmm.
From your point of view, will it has an impact on the Malaysian financial condition?
Oh, the government change will not affect anything relating to financial reporting because financial reporting basically is governed by all these IFRSs, okay, basically controlled by NASP, and then the Companies Act, okay. Then all these so-called statute or all this framework are not affected by any government change. Let's say politicians when they change or take over a new government, so far they have no time to look at all these things. Yeah. So there's no so-called concern that the change in government will always affect all your so-called financial reporting requirements. No.
Okay, thank you for the answer from Saskia and then the answer from Mr. Kwok. Okay. Mr. Kwok, I also have one question, which is on the material you presented, it said that from January the 1st, 2018, Malaysia is already fully convergent.
Yes.
Is it mandatory from the British maybe because Malaysia is ex-British colony or member of the Commonwealth to be fully convergent in FNS?
Oh, see, to be fully converged is not. You see, all IFRS issued by IASP has no legal standing in all the countries in the world. Okay, that's why IASP has to do a lot of work. Okay, they have to talk to all the countries and so-called try to convince them. You see always the advantage they always tell countries is that why they want every country to adopt the same IFRS. Like I mentioned just now, consistency in the so-called the application of the accounting standards in the preparation of the financial statement would ensure that the financial statements are comparable. Okay, because you see, if every country were to prepare their financial statement using their own national accounting standards, which are different, accounting treatment also very different. How are you going to compare? Okay, let's say country A, the results say profit 20 million. Country B say also 20 million. Okay. Another one also said 20 million. Their operations is about the same. But they adopt all different accounting standards. They use different accounting treatment. But can you say that they are all equal? Can you say that they are all equally performing and efficient? No, you can't. You will have to make sure that you judge them based on certain equal standing, equal basis, how they arrive at the 20 million. You see, because if you adjust, let's say all of them to be using to use a consistent standard, you may find that ended up, okay, A maybe actually use reporting only 18 million. Okay, B still 20 million. And C maybe only 17 million. Okay, so that is the main driving force, okay, for countries to be fully converged. But of course, there's always this so-called national pride that countries, they will have to contend with, because most countries, they have their own national accounting body, and most national body in charge of accounting standard setting. Okay, so for them to, let's say they fully converge, that means they can just adopt the IFRS standards, they don't need to develop. Okay, then it's like they may find that they are like out of job. Their existence is quite meaningless anymore. They just adopt. Okay, but they can still serve a purpose in the sense that they can give guidance to their local companies as to how to implement, okay, how to interpret the standards, okay, and guide them in the effective implementation of the accounting standards. And of course, sometimes, even let's say in Malaysia, because the Islamic, so-called Islamic industry, we do, I think MASB still issue some so-called unique standard that is only catered for companies that operate in the so-called in Islamic say capital industry. It doesn't apply to any other company. It doesn't apply anywhere. It's strictly to those companies only. But other than that, other companies will just buy the higher prices. So that is the purpose.
Yeah, okay. Thank you for the answer. We have next question from Sarah Johanna. Good afternoon. Maybe it's going to be good morning. Good morning, sir.
Yeah.
I want to raise a question about Malaysian financial situation nowadays. Has Malaysia finance recover from COVID pandemic crisis? Thank you.
I think if you look at since we opened beginning of the resume operations fully in beginning of this year, I think a lot of companies have, I think, more or less recovered very well. Okay, of course, some companies have suffered more during the period, but surprisingly, there are some who have actually prospered and even scored expanded during the pandemic period. You know? So I think if they can survive the pandemic and they can still exist when the country reopens, I think they are there. They should be able to recover. But of course, unfortunately, we do have quite a number of cases where before we reopen, right, last year itself, quite a number of them have so-called decided to wind up. Yeah. So I think overall, I would say companies are recovering and they should be able to recover from.
Okay, thank you thank you for the question from Sarah and the info from Zeko. And then another question from Rebecca. Good morning, sir. I have a question regarding the convergence with IFRS. Is there any major problem or issue during the transition in applying the IFRS before it's fully converged on January 1st, 2018?
Oh, there are. In fact, the original plan of MASB is to be fully converged on 2012, and it was delayed to 2018. Okay. Actually, it's because of certain so-called accounting standards where, when issued by IASB, when they apply to the Malaysian environment, it cannot be accepted. Okay? A good example is Thailand. I think there's one time when they issued a new standard regarding, I think, the recognition of revenue. When it applied to those property development, the original requirement says if the company has not so-called satisfied its performance obligation to house buyer, that means you have not completed the houses, you cannot recognize any revenue. That means every developer, they cannot recognize any partial or progressive profit until and unless complete the project. That was the original standard. And the moment that comes out, and the official tells IASB, this one cannot be accepted. If you were to apply to the Malaysian environment, see, a lot of companies, their projects run, let's say, over 3 years. If you say, ask them to wait 3 years, that means for the next 3 years, they don't have any revenue, no income. They have to wait until 3 years to report the revenue, report the profit. I mean, how are they going to survive? How are they going to so-called answer to the shareholders? Okay. So for that reason, when that standard came out, straight away, MASB said we cannot comply, we are not going to comply. So that's why it cannot work. So they have to go back to IFRS committee, IASB, and negotiate again and relook and see how to fine-tune the provisions of the accounting standards to how to make sure that we can accommodate, okay, the so-called the business operations. So I think this is just one example. So there may be others Okay, and another thing is maybe those relating to financial instrument. Okay, so financial instrument, let's say, it is something that is very significant, especially the companies that have a lot of borrowings. Okay, because the new financial reporting standard says that the moment you have this so-called certain derivatives, certain financial instrument, you need to recognize the financial costs separately, not just based on the so-called the legal document. You have to base on in substance the real market interest rate payable. So if you have for companies, especially public listed companies, that they have a lot of borrowings or they have issued a lot of, let's say, bond or debentures, they are going to be going to suffer a lot if they were to adopt the accounting standard. So that one also they have to go back to ISP and let's say ask for something like a grace period or maybe some fine tune. The ISP accounting standard on financial instrument is the most controversial, okay, and most amended and revised accounting standard despite its new issue. So all these things create a lot of problems. And that's why we couldn't converge on 2012 on the original so-called time frame. It was delayed until 2018.
All right. Thank you, Mr. Ko, for the answer. And thank you for the question. So we have one more question. This is from our student named Fiona. Good morning, sir. I would like to ask regarding the financial trends that are happening in Malaysia. The financial trend. As we know, technologies such as big data, IoT, Internet of Things, and blockchain are very hotly debated topics. These technologies, sooner or later, will be implemented by financial institutions all over the world. What about in Malaysia? Will there be any impact of the implementation of these technologies to the MASB? And if there is, how will it impact the MASB? What are the prospects of the changes that might happen? Thank you.
Okay, I think the advancement in the digital technology, I mean, no countries will be able to avoid, and you have to embrace it sooner or later. And then, in fact, the sooner the better. If you do it later, you will be left behind. Okay. In fact, due to this digital technology advancement development, in fact, we will see that the accounting programs have seen some decline as a result, because increasingly parents and students are thinking that because of the increasing use of, let's say, the digital technology, big data analytics, things like that, and even AI, okay, the positions of accountants are being increasingly replaced. But it is not the case. Okay, you see, digital technology can facilitate your work, can make you more efficient. But at the end of the day, okay, you are still required to look at the figures, okay, and interpret and so-called read something extra into the figures that you present in your financial statement. Okay, because I think we have not come to a stage where the AI can actually interpret the financial statement. Okay, because to interpret a set of financial statement, you need to look at the environment, the operating environment of the company, okay, the operating environment or even the economic environment of the country, not just the country, even the whole world. Okay, so it is not, it does affect in the sense that, let's say in the case of what your concern is on MASB. MASB accounting standard will still be there. You still need it. Whether it is so-called implemented by human beings or implemented by robots or AI, it is still required, because the existence of higher policy standards, it is basically to achieve consistency, comparable between financial statements of different companies, even if they are in different industries. Okay, so they are still the accounting standard will still be there. Okay, it's a matter of the interpretation, the use of technology in the financial reporting the preparation, the interpretation part. The preparation part can be very so-called digitalized. Okay, in fact, nowadays, I don't think companies need human to really prepare financial statement. Okay, accounting systems are there. Basically, at the end of the month, you just press the button, then the monthly report will come out in a prescribed format. Okay, but once the report is produced, what happens? Who will sit? The management. But are they able to interpret or so-called decipher what does the financial statement is telling them? No, they need an accountant. Okay, a person with the so-called expert accounting knowledge, understanding of the IFRS to interpret what does it mean. Okay, because every figure, let's say in the SOFP, has a specific meaning why they are presented as such. Okay, as it is now, we still do not have AI that can do that for you. So the accountants is still very much quiet. Okay, so if you are an accounting student, don't worry. In fact, in our case, all our so-called big four accounting firm partners, they are coming to us and say, where are our graduates? They can't get graduates. They can't get people. Ended up, they have to print from other accounting firms. No, I mean, which is end up to be a so-called a vicious chain reaction. Because I think a lot of our graduates in our case, they have gone over to countries like Singapore or even Australia, okay, to earn so-called better currencies. Okay. So don't worry, advancement in the digital technology, welcome it, embrace it with open arms, but at the same time, develop all your so-called critical thinking, critical application skills when it comes to all your financial reporting so-called standards.
Okay. Yeah, thank you for the question from Fiona and the answer from Soko.
Yeah.
Maybe this is the last question because we are limited by time. This is the last question is from Sarah. I have another question, sir. In social media, the talks about the recession have already spread, and sometimes it turned out into fear-mongering to society, especially in Indonesia. Have Malaysian companies already prepared for that situation that issue at the end of 2023 or early of 2024? And is there any particular strategy that Malaysia already prepared?
Recession.
Yeah, recession.
Actually, the risk of recession is currently, I think it's quite I would say I would look at it as quite high, partly because of the developments around the world, especially in the case of the Russia-Ukraine war, okay, which on the surface we look at this, the two countries thing, but in actual fact, it's not. It's more like the whole Europe, including the US, trying to fight or trying to create a downfall of Russia. Okay, but there is always a risk. Now, the tension is also escalating, with each party trying to do so-called preparations to even use nuclear weapons. Okay, so the risk is very, very real. Okay, and then like the shortage of so-called the cheap energy in the Europe is creating a lot of so-called ways of taking that. And some are like trying to say pull out from China, and the US and some of the European countries are even trying to restrict, okay, the so-called the business volume with China, things like that, which I look at it is very negative. Why can't all of us coexist, okay, and work for a win-win situation where you prosper, I prosper? Okay, why do we want to restrict the development of another country just for the purpose of maintaining our own so-called superiority? Okay? If we can go on that basis, I think trade should be able to prosper, and I think it will be for the good of the whole world. But if countries, especially Europe and the US, were to continue to so-called restrict such tension, I think it will eventually, okay, bring recession to all our doorstep. Because now, like the US, to preserve their own position, they are increasing interest rate. When they increase interest rates, what happens? All the funds go back to them, and all the other countries who rely on US dollar as the main currency for international trade, they also suffer. They are forced to increase interest rate as well, which they cannot bear. Okay, so I think all these things is very much depend on how the companies, of course, major powers think and what do they want. They must look at so-called the greater good. Maybe we must always go for so-called win-win rather than I only want myself to win, I want you to lose. You cannot. Things cannot work. In any business relationship, who will want to work with you if you only want you yourself to gain and want me to lose? Right? Nobody will want that. Okay. So I think the situation here is that a lot of companies are preparing for hard time. Okay. But I think they are also trying to do their best and try to so-called ride over this recession storm. I mean, hopefully the census will come to those so-called warring countries, the Europe countries, in the US, then things will go back to be more normal, so trading can resume. Again, because good thing now is that at least now China is still the so-called the big power that can still generate so-called growth, contributes to the world economy. Because if not, then we are definitely already down in the recession. Okay.
Okay. Okay. Thank you, Mr. Ko, for the answer. So, before we, then I will make some conclusion regarding this matter. First, Bank Sentral in Malaysia is called Bank Negara Malaysia, and the standard word called Malaysian Accounting Standard Board, or MASB. Since January the 1st, 2018, Malaysia already fully converted with IFRS, and no par value for shares since Company Act 2016. Private company and public company. Private company called SDN Berhad, which is abbreviation from Sendirian Berhad. But there is no Berduaan Berhad.
Oh,
it's just a joke. Indonesian said Sendirian is alone. Berduaan is two people. And the public company is Berhad. Malaysian has AGD, which is Accountant General Department of Malaysia. And then the last is Malaysia does not apply the standard from AAOEP.
we don't.
Okay, thank you. And then I can bring back to Mr. Heskiko as the MC. Mr. Heskiko,
Okay. Thank you. Thank you.
Thank you very much, Mr. Bambang, for leading the event so well. And thank you very much, Mr. Kokim Sang, for the very insightful and knowledgeable presentation. I believe that all of you have acquired the knowledge in regarding how the financial reporting landscape is in Malaysia, especially from Encik Kokim Siang's explanation. Before we end our event, let us move on to the photo session. So everyone, please open your cameras and give us your best smiles for the camera. For this part of the event, may I ask Ms. Mahda to lead the session for us. Please, Ms. Mahda, the time is yours.
Okay, thank you very much, Mr. Heskey. Okay, everyone, I will wait you to open the camera for the photo session. Okay. I think we start for the photo session. We have 11 page. From page 1, I will shoot 1, 2, 3. And pitch 2, 1, 2, 3. The third flip 1, 2, 3. Fourth pitch 1, 2, 3. 5 pitch 1, 2, 3. Okay. 2, 1, 2, 3. 1, 2, 3. Pitch 1, 2, 3. 1, 2, 3. 1, 2, 3. On the last page 1, 2, 3. Okay, we have done the photo session, and Mr. Heskey, the time is yours. Thank you.
Yes, thank you very much, Ms. Manda. Time has passed so fast that we are now already at the end of the event. It is a shame, but all journeys must have their ends. Before leaving this Zoom session, may I please remind everyone to fill the evaluation form that will be sent to you by the committee. The evaluation form will be closed in a few hours after the event, so please do not be late in submitting your summaries. That concludes today's event. Thank you for attending and participating actively in this event. This is Haskiko as your MC. Stay safe, stay healthy, and see you on our next event. Thank you very much, everyone.
Thank you very much.